Hey traders, welcome to the Q2 global macro breakdown, the technical analysis basically from a weekly and monthly chart perspective. The longer term charts give us a lot more accurate picture of what's on the cards. So we like to zoom out every quarter and just see what the markets are saying, how things are rolling. And basically what I'm looking at from what you saw in our Q1 macro breakdown, things are pretty much in line for that big change in narrative that we've been looking for. There's been no difference this first 3 months. It's been a slow start to the move, but it seems to me that that move is on its way to continuing. And 2021 is going to be quite a chaotic year and potentially the start of a much longer term bear market across the globe and a stronger dollar bull market moving forward. So I wanted to start today with the gold silver ratio, just to give you guys an understanding exactly what I'm expecting moving forward and how it's playing out, regardless of what we're seeing on the news about stimulus, about continued printing of dollars and how that's going to equate to a dollar bear market and increased inflation. Because when you look at 2008, we saw the exact same thing. For 2 years, we saw a 2008 drawdown in the gold silver ratio, and the gold silver ratio is basically a good indicator of an inflationary versus a deflationary environment. So you see inflation when silver outperforms gold. You see a lot of speculators moving into silver on top of gold. They both rise together, but silver outperforms gold over that period. And that's from an inflationary environment point of view. Then we go into a deflationary environment, or when a financially unstable environment, when gold starts to outperform silver, and you see a lot of investors running to gold as a safety haven. It doesn't mean that gold rallies against the dollar. It just means in terms of a gold silver ratio, the gold silver ratio is an indicator of the health of the financial markets basically across the globe. And what we saw in 2008 was obviously a huge amount of stimulus, Q1, Q2, Q3, governments printing money to stimulate the economy and gold outperforming silver. But then what happened in 2011 was a European debt crisis, which led to a reverse of that silver ratio, gold silver ratio. And we headed back into a basically 10-year deflationary move on the chart. And then we had obviously the coronavirus pandemic, and we had at the moment, we've had a year and a little bit of a gold silver ratio rallying, where the gold or silver is outperforming gold in this inflationary environment. And what I believe now is what's going to start to occur is we're going to go back to that deflationary environment. And I think this time around, it seems to me that it's going to be an emerging market debt crisis that's going to cause this move. And when we start to see this move, we go back to a dollar bull market. That's what's going to occur over, I reckon, the next 2-3 years. Moving forward is going to be a dollar bull market. Even though people are saying, no, the printing press is running, we're seeing the dollar weaken. It's exactly what we saw in 2008 to 2011. But then that reversed and we went back into a dollar bull market, and that had some profound effects across the market. I think we're going to see that now again moving forward, but it's not going to be a slow, choppy move. It's going to be a much more accelerated move in the dollar moving forward. Taking that same mentality into the commodity index, because what you see when you see inflation is a rally in commodities, because everything gets devalued or increased in value against the dollar because the dollar is being devalued. And we saw the same thing in 2008 to 2011. We saw the introduction of QE1. It took a few months for QE1 to come into the system, but then we started to see commodities rally as consumers, as retail investors, as investors themselves looked at the charts and decided that we were going to start to see inflation. And that's exactly what we've seen over the last year and a bit, where consumers expecting inflation, and yet we get into the European debt crisis in 2011, and that inflation of commodities, that new beginning of the super cycle, as they called it back then, and as they're calling it now, started to unfold as a continued commodity bear market. from basically 2011 all the way to 2020. And what we're seeing now is the same thing. We're seeing that big rally with the possibility of seeing inflation. You're expecting inflation moving forward, and then we go back into that deflationary environment as a result of, as last time it was a European debt crisis, this time I believe from what the charts are saying, it's going to be an emerging market debt crisis, and then we're going to see a continuation of that commodity market bear market, basically. So looking for that to turn, we're right at that level now. We're sitting at the minimums where we could start to see a turn in the market to the downside. We're sitting right at that 0.618 region, and we could start to fall to the downside. This could take, again, a couple of months to play out, but I still see this across the board where we're going to head back into a deflationary environment as a result of an economic shock, and we are going to fall rather rapidly to the downside, in my view, as commodities take a hit and as that narrative that we're trading in inflationary environment starts to fade, and we go back towards that dollar bull market. And we're seeing the same thing in US dollar renminbi, the Chinese currency, where basically since May 2020, we've seen that move to the downside as people expect the dollar bull market to fade away. But when you see what the chart is representing, we've got this nice impulse off the lows, and we go into a very clean and clear ABC corrective structure. And you can see this ABC is approaching its end now, it seems. As you can see, we've got that 1-to-1 ratio that we look for. And when you zoom in, you can see we've broken through this little trend line. And when you zoom in all the way, you can see price action is confirming the turn at the moment, because what we have, again, is that big impulse off the lows. We go into an ABC correction. As we've just broken the highs, we lead to a very high probability that we get a pullback from here, but it's only a temporary corrective pullback because the next move up is to the upside. So we'll get this ABC corrective structure, and then we impulse to the upside. And that is a confirmation of a high probability that we've seen a turn in the renminbi, and the next move is back to old highs and probably further and beyond that. And we see that in a lot of pairs at the moment, especially against the US dollar, which is indicating to me we started to see that financial change in narrative back towards that deflationary environment. So starting with the charts, we're going to run through everything now. DXY, as you guys know, we've been seeing the same thing. I want to go to the monthly chart just to show you the candle closure that we've gotten for March, for Q1. As you see, Q1, January, we start with a little bit of a, it's not really a doji, but it's kind of in that narrative. Then we get another doji in January, February. So candlestick wise, you see this turning in the markets, and now we're closing off with a bullish engulfing candle, basically showing a big reverse of the market, a big reverse of trend right in the area where we're looking for that turn of that ABC. So you're seeing the same thing across the board in the dollar, a turn in that environment back towards dollar strength and the next bull market in the dollar. We're still yet to be confirmed in terms of price action. There's a couple of things I'd like to see, but at the moment, I think there's a good 70 to 80% chance that this dollar bull market has started and we're off to the races. And this is going to change everything. It changes the entire narrative of the market and what the market's been trading. And this is going to have a large effect on a lot of things, including Bitcoin and the crypto markets, because that entire narrative of we saving ourselves because the dollar is being printed to oblivion is going to come out the window. And you may see these hedge funds that have been buying Bitcoin start to sell out of those positions as the dollar starts to rally and we go into that dollar bull market. And just a reminder, the last time we saw an Asian crisis was in 1997. And this is what we saw from the dollar, a move. We can expect a move of this nature from around about 89 up into the high hundreds or lower hundreds, sorry, mid to low hundreds, 131 to 150. As that dollar strength really kicks in. And that's going to have a big effect on the dollar market because of the Triffin dilemma, the Triffin paradox, where the global markets are going to have a shortage of dollars and the dollar is really going to start to rally. We're seeing the same thing. So the DXY is obviously very broadly based in the euro, but the FXCM dollar index is more split out. It's a equal weighting against the Aussie dollar, the British pound, the yen, and the euro, if I'm not mistaken. It's a way more equally weighted narrative, and we can see that we're sitting right at those regions where you want to turn to the downside. To be more accurate, you can go to the weekly line chart, and you'll see the weekly line chart is sitting exactly at that 1-to-1 level, that 1-to-1 region, and turning to the upside from there. So I really believe this dollar bull market is starting to kick off. And this next quarter, Q2, is going to indicate to us that, wow, okay, things aren't what they seem, and the market narrative is about to change in a rapid manner. Euros, US dollar, same thing. We've got this ABC corrective structure, and you look at the candlesticks, you can see how we're getting this big bearish engulfing candle. The lower time frames are confirming the same thing. We've seen a topping out. As you guys know from my video from the beginning of the year, my bearish video, I was very concerned we were seeing a turn. And since the beginning of the year, we've seen this market just continue to fall. We continue to see this euro weakening against the dollar. And it's not just the euro that's weakening. We're really starting to see this turn in some of the other pairs. When we go to the pound looks especially weak to me across the board. And we can see what we have here is a very, very clean ABC corrective structure, which I believe had topped out in February. And we're starting to see that downside now. As of last week, we are in our pound short, trading it to the downside. We are sitting at around about break even, slightly underwater. You can ignore this. This is just a potential outcome if we're wrong. But what I'm seeing here is what looks to me to be the start of that dollar bull market to the downside. Basically, if we're seeing that dollar bull market, just to give you an indication of what to expect, you would expect the pound to head to around about parity against the dollar. So that's a very, very big move in the pound, and the pound is one of the weaker currencies that I'm seeing on the charts at the moment. There's a possibility, and that's why I had this little squiggly line in. It's a possibility that this is just corrective, a corrective move for more upside, which means for the next few months we'll be in sideways move in the pound dollar. But later on, probably towards the end of the year, we will start to see this move. So it's not a matter of if this move is going to happen. I believe it's a matter of when and if we have seen the top yet or not. I'm seeing a lot of signs that we have seen the top. So I'm looking for that downside now, but it's possible that I'm wrong. And it might take a few more months for this to play out. But what I'm seeing at the moment is a good indication of a turn to the downside in a lot of these pairs. Aussie dollar, US dollar is another one. When we zoom out on the Aussie dollar, US dollar, or let's go to the New Zealand dollar first, just to give you an indication of the structure I'm looking at. Structure-wise, go to the monthly. You can see we want this impulse down, corrective structure, impulse down. So there's a lot of mess here. Let me just clean this up. But what you can really see is the structure that's played out here. We've had an impulse down. We've gone into a nice big ABC corrective structure. This is the only real ABC you guys need to be concerned with. And what we're seeing on the close is this little pin bar to the upside and a very big drop to the downside. So you're seeing that turn to the downside already on the New Zealand dollar, US dollar. And the structure just very, very clean. You have this impulse to the upside, which is an A wave, a nice long choppy drawn out wave to the downside. And we went to cross this 1-to-1 up to the 1.414 on the fib numbers, and we started to fall from there. So it looks to me that we've turned on the higher time frames, and the lower time frames starting to resemble that. When you see this kind of move from the highs, that's very impulsive and very much in line with the move we expect moving forward down the line. Aussie dollar, same thing, higher time frame structures, ABC corrective structure looks to be complete. And when we zoom all the way out, you can expect a continuation of this to the downside. I need to go to the longer term chart, which you find on IDC. And you can see the structure we're playing out here. And what's to come next is a move down towards this 47.50 region in the Aussie dollar. So it's going to get hit really badly as well. So again, you have this impulse off the highs. You go into this ABC corrective structure, and the next move down is on the same lines down towards this 48 region to break these lows. So that's the kind of moves we're expecting moving forward. These are not small moves, and that's resembling some form of dollar bull market that's going to really take the charts to that kind of level. And as you can see, ABC corrective structure, we're pulling back from this 1.618 region. And when you zoom out, you can see we've had quite a big move, not as big as the New Zealand dollar, but it's a good indication that what we're seeing is a turn to the downside. US dollar CAD, higher time frames, that same structure really. You see this impulse up into this region, and then you go through this big ABC corrective structure, and we're starting to turn from the lows of this structure. Ideally, we would have liked to have seen these lows broken at 120. When we look at the lower time frames, we're starting to see a little bit of a turn in the momentum to the upside, and we're starting to see a little bit of a change in narrative, I believe. So once we start to see confirmation of this, the CAD seems to be holding up pretty strongly in relation to the other commodity currencies. But as oil starts to turn, which we have seen already, it seems that the CAD is going to start to turn as well. And once we get this confirmation, once we get this first corrective structure on the lower time frames, it'll be a good indication that we have seen that turn moving forward. US dollar Swiss and US dollar yen are already showing me what I need to see, and a good confirmation of what we've seen. If you get rid of the drawings, you can just see the rally we've had off these lows in the dollar. So we bottomed out at this 87, and we're just rallying strongly from there up to 94. You're seeing the same thing in the US dollar yen, just seeing this massive rally play out. And that should, given the structure that we're looking at, continue up towards around about the 122 region if it continues the way it is. So there's a good chance we've seen a bottoming out of the structure, and we're now starting to rally to the upside up to 123. So like I said, when you go through all these dollar pairs, a lot of them are looking like they've turned. Yen and Swiss look like they've turned already. Aussie dollar and New Zealand dollar look like they turned recently, and the CAD looks like it's starting to turn. Pound look like it's starting to turn. Euro looks like it's turned already. So a lot of these charts showing the same thing. Going into silver, as you guys know, I've been bearish precious metals, silver, precious metals, including silver, for some time now. When we went out to my monthly chart, like I showed you back in the beginning of the year, I said, watch for this to start to fall to the downside, and we're going to start to see silver down to those single digits once again. Despite what everyone's talking about inflation, we're still seeing that silver turn to the downside. Basically, from February, we've seen downside in silver. We've seen a little bit of a double top, and we've seen silver melting to the downside against kind of a release of that latest stimulus bill. Everything that's supposed to be inflationary has seen silver fall to the downside. So I'm telling you, this narrative is really starting to change, and people are saying, well, if we're getting all the stimulus and precious metals are falling, what does that mean? We're seeing the dollar rally. What does that mean? We're not seeing the inflation we were speaking of. So something else is at play. And I think the market's slowly starting to digest that news. And we're starting to see that fall to the downside moving forward. So just keep an eye on these precious metals. If they continue to fall, they're going to be a big indicator that that commodities cycle is over, that inflationary environment is over. And the next move down in silver, I believe, is going to be into single digits down towards $3, $4, which is a big call considering we're at 24. But I just see this happening moving forward. I'm a big believer that this is going to be an issue moving forward. Gold, same thing. We are down off those highs, 20% off the highs in gold in this supposedly inflationary environment, which doesn't really make sense. So when we zoom out onto the monthly on gold, you have my the same understanding that I believe we're going to see gold head down towards around about 1250 before we see that move higher. And that's all got to do with the dollar. We're going back into a dollar strength environment, and that's going to cause a lot of problems for the global market. Copper is another one. Everyone's saying the super cycle in commodities has taken off, but the structure to me is saying we've had a little bit of a corrective move. The supply squeeze that we saw from the lockdowns are now over, and we're going to start to go back to that bear market trend that we've been having since 2011. So it's just been a short-term. Firstly, we had the rally in 2016, 2017, that faded down. And then we saw the COVID rally over the last year. I believe that rally is now over. And the next move in copper is going to be a bearish one, which is going to be a good indicator for a move back towards a commodity bear market. And we're going to the lower time frames. You can see we've had the strong impulse off the highs, and it seems to me we are now correcting for another leg down lower. This corrective structure, if we start to move down towards these lows at 380 per pound, that to me is going to be the confirmation we need that says we're going back towards that commodity bear market. Same with platinum. We've had this big impulse off the highs. We're going into correction, and then we're going to see an impulse to the downside. Higher time frames on the weeklies show you the same thing. It doesn't matter how you look at it. I'm tending to go back towards my previous understanding of the chart, which was, it was actually this one. This was your impulse down. And we are now completing this move to the upside over here. So this was this move to the upside, and our next move is to the downside to go break the lows once again at 550 platinum. Before we see that real commodity super cycle take off, we need one leg lower. And again, like I said, we started to see that turn from the highs at 1338, which was the minimum target we needed. And we've now turned to the downside, I believe. We're now correcting for further downside. And this correction is confirmation that we've turned. So once this continues to play out over this quarter, we're going to start to see this rally pretty strongly. We're seeing the same thing in Palladium. Really messy price action, but what I expect moving forward is this move to the downside, down towards probably 2000, then maybe a short rally, and then another big leg to the downside. The Palladium's a little bit different, but it kind of ties in with the change in narrative as things continue to play out. Euro Oz just continues to fade away. As you guys know, if you've been with me a while, we looked for this short in this 164 region. We're now sitting at 154, and this was continuing to fall to the downside. Structurally speaking, the euro testing the highs and structure. We are approaching that region where we could start to see a turn to the upside. So this is one of those pairs that is going to take some time to play out, because the dollar pairs are going to be more conclusive. But eventually you're going to see, like we said, that commodity cycles start to shift. Those commodity currencies start to hurt, and we shift back to that euro strength environment. But the structure so far has played out pretty well. Our short trades played out really well. But we're going to start to look for a turn in this over the next quarter moving forward. Euro Cad is another one that's been kind of strange price action. But what I suspect moving forward in the Euro Cad is along the lines of a continuation to the upside, euro strength against the CAD, especially as oil starts to fall moving forward. On the lower timeframes, we have a pretty clean structure of an impulse to the upside, pretty strange ABC corrective structure, but we're in a zone where we can start to look for a buy to the upside. And those lower timeframes, it's kind of a double bottom structure that we have at the moment. You can see this MACD divergence, the momentum starting to die. And I suspect we're going to start to see this turn to the upside. This is a trade we'll be looking for this quarter, because it could be quite a nice longer term trade. Euro Swiss. I'm not going to get into it. It's a little bit confusing in terms of structure. Potentially this was the structure, impulse ABC, impulse up, and now we're just in correction for further upside. Nothing really there for me. Euro pound, I believe, is going to move quite strongly if we zoom out to the weeklies. I believe what we've had is a nice impulse off the lows. We've had this nice long drawn out, potentially a complex flat or an A, B, C, D, E, depending how you want to look at it, expanding triangle. And then I believe the next move up is another impulse to the upside. All the way out, you can see how this is a nice A wave, and this is a nice complex B wave that we've had since basically 2015. The next move is going to be towards euro strength. I think it's more towards pound weakness rather than euro strength, because if you look at all the pound pairs, they all look like they want to move quite strongly. Euro yen, shorter term, we're still in our euro short. It's been pretty choppy, but I suspect this is either going to break even and then turn to the downside from the highs, or we are already in this move to the downside, and this should accelerate fairly strongly moving forward. Structure wise, still looks good to me, about an impulse correction. We want to move down towards 125 and then flip it around and trade it up towards 138. When we go to the weekly charts, you can see the structure is just really clean. We've had this impulse up, impulse down, impulse up. I believe what we just finished was our B wave of the semi-lower degree structure. This is still the weekly, so there's a lot of complexity in these structures, but I suspect what we are now is the move back up to kind of 137, 139 as the euro rallies, and then kind of risk off, we head back into yen safe haven trade, and the yen takes off once again, kind of matches the US dollar yen trade at the moment, where we're seeing this yen weakness for now, but then we're going to flip that around as we head into the contagion of that crisis moving forward, and the yen once again takes its safe haven status. So yeah, I expect to move down to kind of 124 in the euro yen, and then for that to rally up towards these highs at 139, and then from there, kind of 139, 140, we should get a continuation to the downside following the structure of this place. So some really nice trades in the euro yen. I'll be focusing on the euro yen quite a lot over the next few weeks and months, even years, as these moves continue to show good structure and good price action. As you can see, when you can get a good entry, these tend to move pretty well. As you can see, the very impulsive moves. We went into, I believe, this corrective structure move, but those impulsive moves are going to start to continue moving forward. So you can get some really good trades out of that. Euro New Zealand, again, still in our shorter term trade, looking for this to trade up towards 174. We've got two positions running, getting a nice start to the week. I suspect this is going to be a slow little move, and then eventually we get a nice move up towards 174 at our full target. And then again, we're looking to flip that around, trading this down to 155, given the higher time frame structure that we're seeing is a nice ABC corrective structure. So there's going to be a run up to 174, a move back down to kind of at least break these lows at 163, but more than likely get a little bit lower than that. As you can see, you might go test 155, and then from there, another rally to the upside. So the markets are looking really set for some big moves, both to the upside and the downside, and then back to the upside across the board. So there should be some really volatile moves as this COVID crisis starts to unwind, and we see the actual damage following all the stimulus moves. I think underneath that stimulus, there's some real damage across the globe. It's going to start to show itself moving forward. Pound Oz, I'm still bearish. I still believe we're going to see a move below 153. I still think we're trading this as an expanding triangle. It's been a choppy E wave, but when we zoom into the structure of this E wave, I just want to show you guys exactly what I'm looking at. You've had a nice move off the lows and a nice corrective structure in there. I believe this corrective structure is part of an expanding triangle that we have here. This expanding triangle then went into a nice impulse, which we needed from alternation's sake. And we've now had an impulse. We've had another corrective structure, kind of a messy zigzag, and another impulse to the upside. And when you look at that structure, we have this impulse to the upside, a correction, and another impulse right up to this 0.786 region, and we're starting to fade from there. So again, it looks to me like the pound has turned against the Aussie. We go to higher time frames. You can see we started to get an impulse off the highs, and I believe what we're seeing here is the potential entry of this trade, this first corrective structure, which we'll be focusing on this week as an entry. So I want to just see one more rally to the upside, and that's going to be our entry for the short trade. For a longer term trade, very much at the very least down to 173, but more than likely much deeper than that as this pound trade really starts to hurt, or the pound really starts to hurt as a pair. I think we're going to go into negative interest rates in the pound, and that's what's going to hurt the pound. The market's not expecting that because they've been negating it for so long, but I really think that's where we're headed. When you look at the pound CAD, similar scenario, very, very messy pair, but you are seeing this structure play out really well. You've had this impulse, A, B, C, D, E impulse. So this is a complete structure that we've seen that never actually broke these highs at 180. So potentially we're starting to see now this move to the downside to at the very least 163, but possibly even more than that. The higher time frame structures are really messy, so it's hard to really consolidate exactly what we're looking at here. But this is kind of what this pair does. chopped sideways for a long time in a really messy fashion, and then all of a sudden it has this big move. So you see a chop, 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 and then a really big move. And I think that's what we're seeing here. We're seeing this chop, 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 and somehow, somewhere, this move is going to chop down to these lows at 156 and maybe beyond that. That's speculation because of the structure, but when you look at something like the pound Swiss, much cleaner structure. You have a very clean ABC corrective wave, and the next move down, once this C wave is complete, is a move probably down to parity again on the pound Swiss, very much along the same lines as the pound US dollar. Structure's really clean in terms of the waves. We have a nice clean B wave that is an expanding triangle, very clean structure within it, and now we're seeing moves to the downside. The only question is, have we topped or not? So we have to see, is this a topping structure? Are we going to start to see moves to the downside, or is this just a correction for further upside, which we'll have to monitor on the lower time frames, but which we will do week by week, waiting for that turn, waiting for opportunity. Pound yen, same thing. Very, very clean corrective structure. You can see we have a nice clean A wave, very clean corrective B wave, another C wave to the upside. We're flirting with this 0.786 region. Obviously still potentially a little more upside, but we've definitely done enough to turn to the downside, and we'll be monitoring that on the lower timeframes, waiting for the turn, ready to see what comes out of this structure now. Pound New Zealand is another one. As you guys know, we're waiting for a move into this 196 region, and that's exactly what we've got, and now we're looking for that short trade. And why we're looking for a short trade in this region is because of the higher time frame structure. Firstly, the very high time frames. Well, let's just go into the lower time frames. You can see we have a nice impulse off the highs. You can use this as the high. We'll ignore this high flag. We have an impulse. We have a very clean corrective structure, ABC. Now we're right in that region where we're looking for the topping out of the structure before we turn to the downside. Very, very clean structure, which means to me, or says to me, this is a high probability move to the downside in the pound, especially when you match it with all the other pound pairs and what we're seeing there. In terms of the numbers, you can see how we're approaching that 1-to-1 region, that 0.786. We're sitting right in that region where we want to start to look for that turn to the downside. So I'm very keen to look at these lower time frames and look for that turn to the downside. Getting a possible little trade here on what we call the overextended flag play, given how far we've come. It's a potential short trade here that I'll be looking at today with my members. And what we're seeing is potentially the start of a very, very big trade to the downside. We can get a nice clean entry with a very tight stop. And you can obviously see what we're looking at here is at the very least a 7-to-1 trade, but more likely a 12, 13-to-1 moving forward, which we'll get into in the members area later on today. Aussie Dollar Cad is another one that you've seen a strong impulse off the highs, but there's a little bit of a possibility. What we're seeing here is all correction for more upside. Aussie Dollar Cad, the pair itself is very, very messy, so we can't really go into too much detail in terms of the structure itself, but it looks to me like we had an impulse ABC, another impulse, and we've turned to the upside. So the Aussie dollar should continue to outperform the CAD moving forward, especially if you see oil really start to fall in the way I think it is. So just have to see if this is an ABC corrective structure. If we start to turn to the upside, that's actually going to be a really nice long trade given the structure we're looking at. But that's going to take some more fine-tooth comb analysis, which we'll get into in the members area. Aussie dollar Swiss reaching that area where it looks like we've turned to the downside. And Aussie dollar Swiss is one of those narratives, again, it's a lot like the gold silver ratio. When you see Aussie dollar outperforming the Swiss, that's very much a risk on liquidity type trade. Once that liquidity from the central bank starts to dry up, once the dollar starts to rally, this starts to fade to the downside, and we can see continuation to the downside moving forward at some point. I'm not saying we're there already, but we're definitely at an area where we could start to see a turn to the downside. When we zoom out, you can see the structure works really well. I'm trading this as a much bigger, higher degree structure. We've had this impulse. I'll show you guys now, this little impulse of the lows. nice choppy move down to the lows at 53, and then another impulse up from there, which is your ABC corrective structure. And to follow again is a big move to the downside. Again, all kind of popped out of 2011. We finished that move in 2011, 2012 as liquidity dried up. It wasn't a one-off event that caused it. It was just the kind of moving of funds as the market realized, well, we're not in that inflationary environment anymore. We need to head back into safer assets. And then we started to see that Aussie dollar bear market kind of take hold against the Swiss dollar. And that's what we're seeing here, ABC, and we'll see a turn to the downside at some point. Lower time frame, kind of looking more at a move that's indicative of a correction for further upside. So this is still possible to see further upside moving forward. I'm looking for a move up towards 73 to short, and then we'll short that all the way down to 70, and then trade that long from there and look to get out of that short and probably get a much longer term short, as that this will be a much more delayed move than some of the other pairs, but I do like this as a kind of up, down, up trade. You can short it from here, you get long from 70 all the way up, and then once that trade starts to fade, we'll see that move to the longer term trade to the downside. So lots of technical trading happening in the Aussie Swiss, but it does look good to me to fall into line with what we're seeing on the structure. Same with Aussie Dollar Yen, really. When you look down to the weekly charts, you can see the structure is ready for another move down. The structure is really nice and clean. You've had this impulse A, B, C. This is all part of your B wave. So you're seeing this down as an A, B, C. That's all part of your B wave of your higher degree A, B, C. So the Elliott guys will understand what I'm talking about. But really what we're just looking at in layman's terms is we've seen a little corrective structure on the higher time frames, and the next move down is this one to go break these lows at 55 on the Aussie Dollar Yen. Have we turned or not? That's the question. The lower time frames are saying probably a little bit more upside, but this is not fully confirmed yet. Just a reminder where we're sitting on the daily structure. We're sitting right at the top of this move. You have a nice impulse off the lows, you have an ABC, and you have another move up. So we're sitting in that region where we can start to see the turn. Again, obviously, we can have a small correction here, push up to 90, and then we see the big turn from there. So it could be a little bit of a delayed turn to the upside. That's obviously very possible. It doesn't change the fact that we're sitting right at the top of this corrective structure, this ABC. And we need to be cautious of a much bigger move to the downside and a turn and change in that narrative to the downside moving forward. Aussie dollar, New Zealand dollar, very, very messy chart at the moment, kind of staying on the sidelines, but I suspect what we're seeing here is a correction for a little bit more upside, and the correction itself looks like a very messy triangle. I'm kind of staying out of Aussie New Zealand for now. It's very, very messy. I'll be more interested at the highs here at 110, 111, and we can make a decision then. New Zealand dollar yen, very much the same as the Aussie dollar yen, very much confirming downside. If anything, it's more of confirmation to the downside because of how clean the structure is. You have this nice big impulse. You have a very clean ABC corrective structure, and eventually we're going to turn to the downside and see that accelerating down towards 52, more than likely actually get down towards 43, 40, somewhere along the line, somewhere breaking this 44 region. So a pretty big move. It's just a matter of, have we turned yet? When we go to the lower timeframes on New Zealand dollar yen, it's not as bullish as the Aussie dollar yen, because what we have here is what we call an expanding flat. You can see the momentum to the upside is really starting to die. So I suspect we're going to get another leg up that fades away, and it kind of starts to form itself as a head and shoulders top. And then we start to see that move to the downside. So I think we're closer to the top than most market participants believe. And this big move that we saw last week is an indicator that we're starting to see this momentum die off. And the next move down is that big move as the change in narrative starts to occur. Same in New Zealand dollar Swiss. I was looking for this to move to the upside, and all we saw was this fade to the downside. So it's very much along the lines of a lower momentum corrective structure. You could probably see a decent, run up from here. but it seems to me this is very, very close to the top of a much bigger move to the downside. Same structure on the weeklies, very much along the same lines where we're seeing an end of this corrective move. You can see how this trend line is kind of getting taken in now, and the next move down is going to be along those lines. But more of a complex structure here, but the next move down is to go break these lows at 52. So we'll be keeping a close eye on that for an entry as well. Cad Yen is another one. Structure-wise, you can just see straight away this ABC structure we were looking at. Nice, clean, very choppy B wave, which is what you want. A nice impulsive C wave, which is exactly what you want. And now the next move down is one to match this one. Again, having to do with that risk analysis. You're moving into a more risk-off environment. Like I said, more than likely to do with an emerging market crisis more than anything else. And you can see how this ABC is almost complete, if not already complete, to the downside. When we go into lower time frames, took a small loss on this trade here, but I'm still keen to get into this trade. I'm still looking for entry. I'm still looking to get into the trade because of the bigger moves that I'm looking at down the line. So what we had off the highs, excuse me, was a very big impulse. And now it looks like we're correcting for downside. So I'm waiting for this correction to play out, and then I'll be looking to get short the Cad Yen. And when you zoom out, you can just see how this kind of risk-off impulsive move kind of turned into a parabolic structure, and those parabolic structures tend to break down quite rapidly. So you get a little bit of a bull trap. It's that same bubble type structure, and then you have a big impulse to the downside following that bull trap. I see that playing out moving forward, and I think we have topped in the Cad Yen. Swiss Yen, same thing. I believe we've topped out in the Swiss Yen. Higher time frame structures are showing a move from here to at the very least 106, but probably more than likely to go break 100 on the Swiss Yen moving forward. And I think the Swiss's exposure to the US stock market is going to be its downfall as a safe haven currency, especially against the yen. Going into oil, you can see everyone's talking about $100 oil moving forward, but when we look at the structure, you can see we're pulling back from the top of the structure itself, which I believe is going to lead to another big move to the downside in oil as the global economy or the strength of the global economy starts to show itself as not being as strong as people suspect. We've already had a really strong move off the highs, very big impulse. We are down 15% from the highs, or we were down 15% from the highs. I think we're correcting for further downside moving forward. I think oil has topped out, and the next move down is closer to sub 50 than it is to plus 100 in oil. And the global economy commodities cycle starts to see that, okay, maybe we're not in that beginning of the super cycle. That economic growth that the markets are showing is maybe not as accurate as we believe, and we're going to start to see that expressed in the oil price moving forward. S&P is another one. Lower time frames, very confusing at the moment. All we know is when you zoom into the higher time, or when you zoom in, we have this MACD divergence, which shows momentum dying in a region you have to be really cautious of, because when we zoom out to, you can call this the weekly, but it's just a higher time frame structure. You have an impulse, you have an A, B, C, D, E, you have another impulse to the highs. I've always said 4,000 is a key region, and we're flirting with that 4,000 region, and we're starting to lose momentum there. So keep an eye on that moving forward. We've obviously seen a big sell-off in NASDAQ from a key region. Again, we're sitting right at that area where you would need to be cautious for a turn to the downside, and it looks to me like we're starting to see that move. As you can see, strong impulse off the highs, and what looks to be more corrective for more downside than anything else at the moment is indicative of continuation to the downside in the NASDAQ. US 30 seems to be holding up quite well, but when you zoom out to the weekly or the longer time frame structures, it's that same scenario. We have that expanding triangle, we have the blow off top, and we're sitting at that region where you have to be really cautious. The US 30, the Dow, may benefit from what people believe to be the reflationary trade. So people are retrading into the Dow out of the NASDAQ because of that reflationary trade, because they believe we're cycling into value. I think that's going to fade fairly soon. I think 3,500 is a key region on the Dow, and then you'll start to see this turn to the downside as well. So you might see a little bit more upside here before you see that turn, as people believe they're trading the not the reflationary trade, sorry, the rotationary trade, rotating into value stocks out of growth. They think that's the trade for now. But when they start to see that, oh, it's not actually got to do with yield rising, it's actually more of a global market weakness, then that trade's going to start to fall. So potentially a little bit more upside, but you can see how overcooked we are already. And it's really risky. You're picking up pennies in front of a steamroller, trying to get long here for the last few pips before the big turn occurs. The Russell, pretty much same scenario. Structure-wise, you're sitting right at the top, I believe, of a much bigger structure. And when you go to the lower time frames, what we've seen in the last few days, you've seen a very, very big, strong move off those highs. I believe what you're going to see now is a correction and then a continuation of this move to the downside. I believe this is topping out very much along the lines of a head and shoulders top, and that's going to fall from here. 10-year yields, I think, are just getting started. I think these are going to start to rally. I think the next move is going to be to +2, and that's going to have a big effect. I think the dollar is going to rally on these yields rallying, and these yields are going to rally probably fairly soon. It looks the structure. When you go to TLT, you're seeing the same thing on the lower time frames. Can see how we've had this ABC structure play out quite nicely, and we started to see this fall to the downside once again. So we should expect further downside in TLT, which means higher yields moving forward. I think we're going to 2% plus in the yields. Euro equities, Euro stock 50, kind of messy, to be honest, but they show potential for a little bit more upside. You might see people rotating out of NASDAQ into Euro equities, and they have a little bit more upside. But following this, to be honest with you, the structure is very messy. But what I'm seeing is potentially the next move down along those lines. But you're very close to the highs, so you need to be cautious of being in Euro equities. That being said, if you go to the lower timeframes, there is a little bit more upside potential here in the structure, but not much. Like 4,000 is again another key area. You may start to see a turn to the downside. DAX very similar, although DAX has a little bit more room to run than the others. I think 1600 is a key area there. When you go out to the weeklies, you can see how we kind of close to the top of a structure here for potential turn to the downside. You can see how these areas conflate. We're sitting in this 1600 region, and the next move down is one that matches this, I believe, to the downside, which is going to be pretty decent move, probably a 50% drawdown. France, I believe, is going to go break these highs. I think breaking of these highs is going to be a key region there. You have this impulse up, you have this ABC expanding flat, another impulse up. Those highs are going to be a key region following this structure. And you'll probably see we're very close, as you can see, that 1-to-1 region, 6,100 key region. So we're at very dangerous levels, and we zoom in to lower time frames, the lower degree structures. As the members know, we talk about fractal price or fractal nature of prices. You can see how we're sitting right near that 1-to-1 region here as well. So very cautious of what's going to be happening in Euro equities. UK, I think, has some room to run. But again, if US equities go, or pound BOE goes negative on interest rates, the UK stock market should benefit pretty strongly from that. And this is what the longer time frame structure on the pound is showing, to go at least go break these highs at 7,950. So if you're going to go into equities, if you're looking to equities to go into, I think UK equities are the place to be right now. And we should see this rally pretty strongly fairly soon, depending how this little corrective structure plays out. Aussie is another one that's near its target. It's probably going to go break these highs at 72.50. So there's a little bit more upside here that could play out. But again, playing with fire near the highs of the structure. The Nikkei, I think, is in trouble here. I think we're going to start to see a turn to the downside. When we look at the higher time frame structure, you're seeing something fairly clean for a move down towards kind of 2100, 20,000, which is a good 30-40% drawdown, depending how the structure plays out. So I think we're in danger here of topping out in Japanese equities. And obviously, if the Japanese yen starts to run, that's going to be negative for the equities. And we'll see this fail to the downside and start to see a drawdown. When you again look at the lower time frame structure, you can see we've had this impulse going to correction, and we're impulsing up to that 1-to-1 region and starting to fall down from that region. When we go into, say, the hourly charts, you can see from a classic charting point of view, there's potentially a little bit of trouble ahead for these equities. And a break of this neckline, is this 2800 region, is going to be one to the downside and the start of a much bigger move to the downside. So a little bit of danger ahead, I believe, in Japanese equities, which is kind of just showing you not just Japanese equities are in trouble, but kind of the global economy goes back into that risk-off environment. Skipping ahead to EEM, another one to me, which is a massive indicator of where we're going and why I think we're heading into an emerging market crisis. We've seen this chop back up to the highs. The structure is as clean as it gets. We have this A wave. We have a nice impulse up, A, B, C, D, E, another impulse up to break these highs. And the next move down is kind of 50% move down towards, or even more, 60% down towards 2050. When we go into lower time frames, we're already starting to see that turn. Again, we've got this head and shoulders structure starting to form. And when we go into the lowest time frame, we have our first price structure correction, which is how we trade charts. We've had an impulse, nice little ABC corrective structure, and the next move down is another impulse to the downside, which will confirm the start of the move of the higher time frames of a 50% drawdown in these in EEM. And again, like we said, heading towards that emerging market crisis. Hong Kong 30 is another one that's showing that crisis moving forward. What we have is, let's go to the monthlies just to be more clear. We have that same kind of formation. We have the impulse down. We have a nice big up wave, ABC corrective structure, impulse up. We had a big move off the highs back in January 18. You went into this corrective structure. So from February, the last year has been a little bit of an impulse, but that impulse has all been part of this little ABC structure that we have here. Very little nice clean ABC structure that I believe is the topping structure of the Hong Kong 30. We're going to start to see, or the Hong Kong 33, you're going to start to see this impulse to the downside moving forward. And what we're starting to see when you zoom in, you can see that what we had on the 22nd of February was a massive weekly bearish engulfing candle. When we go back to the monthlies, you can see this high pin drop, high pin on the monthlies, and then a pretty big move down. Dailies, you're starting to see a little bit of a head and shoulders forming, a very similar structure like EEM and the like. And Japan, you've got this little head and shoulders that we're starting to see a turn to the downside from there. So again, these emerging market currencies are in line with what we're seeing there too. People taking their money out of Asia, out of emerging markets back into general, more developed markets to find safety there. We've already been through the renminbi. That already looks like it's breaking higher. US dollar Mexican, again, in terms of structure, a little bit of an ABC structure that I've been talking about for, I think, over a year now. I think I filmed my first video about this, to what to expect in May last year. I suspected this move to the downside as we had the reflationary trade, but that reflationary trade is going to lose gas and we're going to start accelerate to the upside. When you zoom in, you can see it looks to me we've had a little bit of a cup and handle bottoming out in the Mexican, and we're going to start to rally to the upside from here at the bottom of that structure. When you look at the Singapore dollar, we've had a massive impulse off the lows, which I believe was the start of the move, and we're now going into correction, which is just a correction for further weakness in the Singapore dollar, further strength in the dollar, again, emerging market upside or emerging market weakness more. And then again, you're seeing that same structure play out. You've got this ABC correction. that looks to be complete. You have a monthly candle that's very, very bullish, and you're starting to see an impulse to the upside. US dollar ZAR is a little bit different. Higher time frame still looks good. We have this nice impulse, ABC correction, flirting with a very key area, and it looks like we're going to take off to 24. Lower time frames, however, showing a little bit of resiliency in the ZAR in comparison to its emerging market peers. Now, politically, we're having some interesting moves where we're getting rid of some of the corruption and stuff. We started to show a little bit of pro-action in terms of fixing up our democracy, which is a good sign. Which could be pretty ZAR bullish in the short term, but I think longer term it's going to fold as the general global market starts to fade. And this I'm showing you here is the 2011 turn in the market, like I said, back towards that deflationary environment, that risk-off environment. And as you can see, when you fold it on top, it's showing very much the same types of price structure. And what we saw following this move in the Rand was a massive increase, a big impulse to the upside, where we went from 11 all the way up to, I think it was 19 or 17 Rand to the dollar. So we're sitting at 14, and we can see a similar move up towards 23, 24 in the US dollar ZAR moving forward once this bottoming out pattern has formed. And as you can see, if you go to a classic charting point of view, we are very much in line with forming an inverse head and shoulders, which could see a turn to the upside moving forward. So just keep that in mind. US dollar Brazil looks like it's turned already. Just to zoom out to the higher time frames, the weekly chart, we've had this impulse, we've had this ABC, and we've now impulsed to the upside. When we go into lower time frames, we had this first corrective structure, which is a running flat ABC, impulse up ABC. Next move up is an impulse, which confirms the higher time frame structure, which confirms we are on par with that higher degree move, which is actually this one to the upside. So we are in line to see the Brazilian real just continue to accelerate to the upside, probably heading into double digits moving forward. So again, emerging market looking really weak. The Russian ruble also looks like it's impulsed and then gone into what looks like a triangle corrective structure. So what we can expect here is potentially another move up, and then another leg down, and then from there a strong impulse to the highs to go break these highs at 82, and potentially a continuation moving forward. Turkey, another one, big sign with the conditions we're seeing, where this big move last week, over the last few weeks, was all to do with Abajan, the Turkish Prime Minister, raising rates by 2% and then firing his financial minister. So you can see that same structure playing out, very much a corrective move of just a continuation of the longer term trend. So you can expect the Turkish lira to get into double digits and beyond, probably heading up towards mid-teens moving forward. And then finally heading into crypto, the crypto space. As you guys know, I've been very, very cautious of crypto in this region. I'm still looking for this move down in towards the $20,000 region to complete the ABC correction that we've been looking at moving forward. I know a lot of people will hear that, especially you Bitcoin maximalists are going to be very defensive about that. When you look at, let's just say, the 200-week moving average, you can see that's right in that region where we can expect a retest. And it's exactly what's happened with Bitcoin before. We go and retest the 200-week with the crashes, or the quote-unquote crashes. So I can expect a retest of this 200-week moving average, and then another impulse after that. And all of this has to do, again, with risk off. Bitcoin's role is going to play its part, but I think we're early to the days where Bitcoin is going to be the savior of the market. I think it's still speculative. We're going to see the crash as we go into risk off. And then Bitcoin's role is going to be better understood when you see these emerging market crises take hold and these emerging markets start to use Bitcoin as their reserve currency because their local currencies are continuing to fail. So people like the Turkish citizens, like the Brazilians, see their currency continue to fall against the dollar, and they start to move into the Brazilian rate or into Bitcoin as a protector of their currency. But we're going to have to see the crisis unfold first, which means Bitcoin going to fall to kind of 20,000, back to, I believe, the 2017 highs before we see that rally moving forward. So just be cautious of Bitcoin in this region. When you zoom into Bitcoin, it's kind of potentially a topping pattern forming already, but also potentially a running flat for continuation to the upside for another leg higher up to 75, which is obviously a possibility. Where we're sitting now, I'm kind of on the sidelines waiting for better opportunity. But if we see a move down towards this 4,500 region and then a turn and an impulse, I would like to get into Bitcoin once again and rally that up to 7,500. But just keeping in mind, all of that is a structure at the top of a very big move on the daily. So it's a very small correction on top of a 600% move. So that could be one of the final moves before we see that downside. Ethereum kind of along the same lines, all the way zoomed out. I suspect we're going to see a big dip in Ethereum to match this little ABC correction that I believe is on the cards. So I think we still need to see a C wave to the downside. When you zoom into the lower time frames, we're kind of waiting for confirmation. This is a little bit more bearish than Bitcoin, because we had this move down, but we never broke the highs with the next rally up. In Bitcoin, we broke the highs. In Ethereum, we didn't. So in reality, what we're looking at is potentially a short-term move to the downside. We get another rally to test the highs, maybe even a double top, and then fade from there to the downside. So very cautious with crypto at the moment. I think we're near the final moves to the upside, and then we're going to start to see another big leg to the downside in crypto moving forward. So cool, guys, that's pretty much it. As you can see, it's all about the dollar. I'm very keen to see where the dollar is going moving forward. If we're going to continue to see this dollar strength, we're going to start to see that huge dollar short unwind, and that dollar unwind is going to see kind of a GameStop style dollar squeeze, which means we're going to see a strong rally in the dollar moving forward, which is going to have major effects for the global economy, especially because so many people on the wrong side of the boat. So many people believe the dollar is weakening, we're having inflation, precious metals are rallying, Bitcoin's rallying because the dollar is getting printed to oblivion. But if the dollar starts to rally, all of that is on the wrong side of the boat, and we'll start to unwind, and we'll start to see things like the emerging markets sell off. You're going to see oil sell off. You're going to see Bitcoin sell off as that entire narrative shifts towards a dollar strength / deflationary environment moving forward. So just keep a strong eye on the dollar. And if we continue to see that rally, you really need to be careful with your positioning moving forward. So cool, guys. Members, I'm going to post a daily strategy session following this video. So we'll see you there soon. If you're not a member, you can join at Trading Academy at thesenecalytics.com/Trading Academy. You can go find the details there. You can find that in my Twitter handle at Senecalytics. You'll find the link there too. Come join us. There's lots of money to be made in the trades that are forming themselves. There's lots of big moves to come, much bigger than what we saw in 2020, but you have to be on the right side of the boat. That's going to be very, very beneficial to you. So come join us. Lots happening there. And yeah, for members, I'll see you soon. Thanks for joining. We'll chat again in the near future.